Okay, time for your Wednesday morning business update. BNN Bloomberg's Paul Bagnall can't join us this week, but fear not, we have another Paul here who sits with Paul on Paul's show regularly. Paul Harris is portfolio manager at Harris Douglas, and he joins us live now. Paul, good morning. Good to see you.
Morning. Thank you for inviting me.
Paul, it's great to have you here. We believe we're continuing to see higher volatility in capital markets yet again today. What a wild, week it's been already, and we're only at Wednesday.
Yeah, so I think the problem is that you're going through a period, like it's so much uncertainty, right? So, and I think that, and it's partly the administration's fault in some ways. Donald Trump says, "Oh, this is a negotiating thing." The other people say it's not. And I think that people were expecting something somewhere between 5 and 10% tariffs and not these numbers. And I think that's created a tremendous amount of volatility. But it also creates a lot of problems for the economy, because I think the issue for the economy, especially the U.S. economy, is that you're probably going into a recession. So you're going into a weaker economy, higher unemployment, and but you still have very strong inflation numbers coming out of the United States. And so that's a very difficult situation for the Federal Reserve to be in, because it's the first time in a long time we've had what they call stagflation, where slower growth, higher inflation. And so it's a very fine line that they have to try and, to walk. And so it's really an awkward time, not only for the Federal Reserve, but the economy, and I think for businesses as well, because if you're a business in the United States, and to a certain degree in Canada as well, and around the world, you're really not making any decisions. It becomes very hard for you to invest capital, to build a factory, to make long-term decisions when you have such volatility at the administration in the United States. So by definition, the economy slows down because you're not really doing anything, right? So it's a very awkward time globally as well as in the United States. And I think you're seeing that as you see more and more kind of CEOs around the United States talk about the fact that this is not the good thing to be doing, right? I mean, whether it's the banking industry, whether it's the airline industry, there's so many people coming out and saying, well, this is the wrong decision. Yes, we expected you to put tariffs on. And finally, I think the issue with all these things is, Donald Trump's vision for many, many years has been that tariffs help you. And I'm not sure in a world we live in today that tariffs are going to help bring back manufacturing to the United States in the way that he wants to see it. It's just not going to happen. And I think that it's a fallacy to believe that doing this will bring people to build factories in the United States at a level that they want, right? So it's not. I don't think that's going to happen. And I think that we have built this massive supply chain in the United States in the car industry. I mean, the car industry is a perfect example of that, right? In this country, with 3 countries making a car, and so, but you're not going to get these kind of companies coming back, especially if there's such uncertainty. Right? Why would you make a decision about $1 billion plant or investing $1 billion in the United States if you're unsure what it's going to look like 2 years from now, or maybe tomorrow morning?
Yeah, and yet Trump has said this is medicine, and sometimes the pill's hard to swallow. But it seems like he's using this as kind of a trade tactic, now saying, oh, China's eager to make a deal with us after slapping that 104% tariff back on them. But Paul, very quickly, I think we're short on time. Let's talk about safety stocks in times like these, large capital technology companies, U.S. banks, healthcare. What's that going to look like?
Well, so, I think volatility can be your friend. I think people get scared of volatility in the stock market, but it can be your friend. And if you are a long-term investor in the stock market, this is a great opportunity to pick companies that you really like, that you want to invest in. And so, we like Microsoft, we like Google, we would continue to buy those companies here. We like healthcare, a company called Stryker, which makes medical devices. So I think that if you are an investor, if you have a long-term view on this is an opportunity to buy companies cheaper at better valuations. And, I'm not trying to say that this is the low in the market by any means, but this is a great opportunity to go and buy businesses, or even if you like buying the index at a lower level than it was, just a month ago. So it's a great opportunity for the long term if you're investing, but you will experience more volatility, I think, over the next several months. But you have to put your money to work slowly, but it's a good chance to do that. And I think you will benefit from that, 3 to 5 years from now, or even a couple of years from now, when the market kind of recuperates a lot of these losses.
Okay, Paul Harris, really appreciate you filling in for Paul Bagnall this morning. Thanks for the insight today. Have a great day.
Thank you, Paul.
Thank you. Bye-bye.